Welcome everybody to BG Behind the Deal. Today we have
Ryan Sutherland. I'm the principal owner of Suncoast Insurance Advisors.
and therefore he deals with insurance, mostly what, properties, automobiles?
We specialize in property casualty, so in that term is that we specialize in both homeowners, auto, and it also comes to business insurance as well.
Very cool. So Ryan, how do you get into this field?
Well, by accident.
I don't think anybody grew up thinking that they want to be insurance
No.
people one day.
No, yeah, it's not like I went to my guidance counselor when I was in high school and I said, "Hey, I just feel like my heartstrings are
I have
getting
an urge
pulled."
to.
I just got my license. I just sat down with my first insurance agent and I sat in his office and I'm thinking to myself, man, this is what I would love to do.
Right.
No, it wasn't that. I just realized that how I got into insurance was my mentor at the time. He worked for State Farm, a captive agent, and he actually, and this is how it's going to date me a little bit, he put a post out on MySpace. So any of the millennials out there, that was prior to Facebook.
Pre-Facebook.
Yeah, pre-Facebook. Not prior, but it was in the same, I think it ran parallel.
Yeah, I think MySpace started first.
Yeah.
And then they kind of ruined it, and Facebook took over.
Oh, I mean, everybody wanted to have their own little, little sound, the little sound bite or whatever, their
Okay.
music attached to their profile, and they can kind of, individualize that. So he had posted on there that he was looking for someone to come work for his agency. And at the time, I was in the alcohol industry, and I was working for a wholesaler / distributor.
Oh, cool.
And I was in that industry for about almost 7 years, and I wanted to make a change.
Okay, let's double click on that.
Okay.
What were you selling as in the alcohol? You said alcohol, right?
Yeah.
What were you selling? Like beer?
No, we did sell that, but I was selling more like, we worked with different companies that we so focused more on wine and liquor.
Okay, awesome.
Yeah, so I used to work for a couple big distributors locally, and then I worked for a small wholesaler out of Miami.
Very nice. You have a favorite wine?
My varietal that I like a nice Petite Syrah, so it's a little bit more, forward
Flavorful.
and a little bit more robust, but therefore it's not as, I would say, is not as overpowering like it's some of the Italian wines.
That's pretty cool. So, and then eventually you decide not to do that anymore. You want to get into insurance.
Right.
Because it's more lucrative, or?
No, for me, I was getting to a point in my life where I kind of wanted to settle down, and I knew for a fact that being on the road a lot, traveling around the state, and being out and about on a regular level, it wasn't for me. And I knew that eventually if I wanted to settle down, maybe start having a family, that I needed to find something that was going to keep me within the area and have more structure.
That is a very common thing that I hear from a lot of entrepreneurs or like self-employed people, because they wanted more time with their family and not be on the road all the time.
Absolutely. And this is even before I had a family. But again, you want to start setting those building blocks.
Right.
And, you also want to look more favorable, especially when you're in a dating scene, that, hey, like, oh, you're always out and about and you're always drinking and everything. So I think that also makes you look like a better candidate.
Really? So let me ask you this. That's interesting.
Sure.
So let's go back to the days when you were dating, right? Let's say you just met a girl for the first time,
Okay.
and they ask you, so Ryan, what do you do for a living? How do you explain yourself? Like, what do you do for a living? Just say, I sell insurance?
When I got into insurance?
Yeah, after you got into insurance.
I would do it. I'd say that I'm an insurance agent, and
Let's assume that person knows nothing about insurance.
well, I mean, again, that's not going to be my sell point right there. Like, hi, I sell insurance. Would you like?
No,
to go
but
on
at
a
some
date
point,
with
I'm
me?
sure they'll ask you, what do you do for a living?
Yeah, but I think, but insurance still brings that type of credibility, where it has. Again, it's stability. I
Right.
mean, it's one of those things that it's safe. Whereas when I was in the alcohol industry, it was more or less I was out and about all over the place, and you had, I could be in a different part of the state, or it could be, just different hours at that time.
Because I thought being somebody who sells alcohol might be a better sell in the dating scene than selling insurance. I'm just saying. Because in the mortgage business, because of financial crisis, what happened
Right.
in like 07,
Right.
08, when I first started getting into the field, So my father-in-law was a banker. He ran 2 retail branches.
Okay.
Back in New York. And when I first told him that, hey, I'm doing a career change, I'm going to become a mortgage broker. You know what he told me? The first thing.
Pick a new profession.
It was like, hey Kevin, you became a mortgage broker? You know what I think about them? They're all crooks.
Well, but I get that similar response when I tell people that I'm in insurance.
Really?
Well, they do. They lump you in there also to say, hey, you're like a personal injury attorney. Because again, people see insurance as you take money and there's really of no substance and there's nothing tangible for them to hold. Mm-hmm. And so they don't really see that until they have to.
They have their wild idea. So, it's interesting you said that, right?
Right.
So how many times have you heard that, wait a minute, that's not covered?
All the time. I mean, all the time. And again, this is where I tell people.
Because people don't know.
Well, no, because we're trained right now for insurance is, you call like one of these different providers out here, and they said, hey, we'll get you a quote, or we'll come here to sum you up in 7 minutes or less.
Right.
Now, really think about that. You are coming in here and you're saying to yourself that I want all my assets, everything that I own, mm-hmm. my family, and protect my family. You wanted me to come up with a scenario and come up with it in less than 7 minutes?
Which is not realistic.
Well, it's not. And we also get pressed upon where someone comes to me and they say, hey, could you have me something back within an hour? Mm-hmm. And to think about this is that you're asking me to examine someone's life or portfolio, come up with a strategy that's going to best protect them, and also cover and make sure that they don't have any faults in their insurance plan. Right. You want me to all come up with this in an hour. Yep. Think about how much pressure that is on us. Because again, your industry, you see this too, is that
I can relate 100%.
You can.
100%. Like people come to me, I work with a lot of investors, a lot of landlords, so someone will be like, hey, I'm to see if I sell these 2 properties, buy 3 more, what do I qualify for?
Right.
Tell me in 30 minutes. I'm like, wait a minute. I need to build a whole new file. I'm going to do all these calculations, and it takes a while. And you want to double check your work because it involves a lot of money.
Right. Well, it is. And again, like I said, if I'm coming here and say for myself, I have a house that's almost $1 million, and I think to myself, I'm like, okay, I'm insuring this. I want to make sure I'm covered for every peril that's out there.
Right.
Because God forbid, we've learned this in the past, in our area in the last year, we had 3 substantial storms in our area, which we're not known for. Mm-hmm. And we had people who were just not reviewing their insurance on a regular basis, which I encourage. I encourage people I encourage my clients whenever they get their renewal packets, give us a call. Let's walk it over. Because again, if you call me and you say, hey Ryan, I have a claim, and I said, okay. And I said, well, what's going on? He said, well, this is what has occurred. And one of the things that I noticed is like, oh, well, my pull screen enclosure had collapsed. Mm-hmm. Well, you bought the house like 3 years ago. You and I haven't had that continuous communication. Well, you didn't tell me that you put a pull in. You didn't tell me that you didn't add that screen enclosure on there, or you didn't tell me that you spent all this money for
interesting.
You spent out for this outside kitchen, or you put you put $200,000 or $250,000 into your home. You didn't tell me this. So that's the whole thing. Is that it's not that I want to try to upsell you.
Right.
A lot of people feel like in my industry that we're trying to come up with a plan to upsell you. My object is, how can we sit down and review your policy, make sure that we're all on the same page,
right,
and to still save you money on a continual basis.
It's interesting because in the mortgage industry, we do something called annual mortgage review, right, to see where you are at, how much equity you have.
Right.
If you want to buy something else, especially like what I said, I work with investors, you want to buy more rental properties, what does that look like? So it sounds like in your industry, you also need an annual review to see whether they've done something to the house, whether they have 10 Rolexes now instead of 5 in the house. Maybe they need more coverage. Correct.
But again, I think this is where I can break it down even more simpler. It's about relationship. Again, I got in this industry because I'm relational. I love relationships in itself.
You're a people person.
And for me, I think the biggest thing, and it's not just sales, but I think for the biggest thing for us to be successful is communication. Mm-hmm. If you don't have that component when you're handling someone's finances, then what are you doing?
Yeah, absolutely.
Are you there for the sell or are you there for the client? And again, I would want my clients to say, oh my gosh, again, I've talked to Ryan probably 10 times this year. I'm okay with that. And you should be okay with that. I mean, there's other agents or people, my peers, that we call absentee agents, where they're okay with the policy renewing. They're not going to sit there and eventually you will filter off because you're going to get to a point where your premiums have just come and then, have just increase. There's no strategy. And then the next thing you know is that you're going here and contacting an individual like myself who is going to sit here and do a review yearly with you. Right. Or as you say, an annual. So.
Let me ask you some specific questions.
Sure.
I deal with HOI all the time, homeowners insurance, and a lot of the time people ask me, hey, if I choose this deductible, basically the higher deductible, the lower premium, right? Usually.
Correct. Usually.
So they will ask me which one to choose. There could maybe like 3-4 options there. What's your take on that?
Well, first of all, I always say sit down with your lender first before you make any of those changes. Because, again, I don't know how your escrow account is set up. So even if you have an escrow account, now, majority of the time, when it comes to your escrow account, I think the threshold is either $5,000 for the all other peril and a 5% hurricane. But
you can exceed a certain deductible amount.
Correct, and that's the threshold.
Correct.
And a lot of people don't know that. The other thing is I also tell my clients as well is that if you decide to take a higher deductible, which is your right, because we call it, I like to change it. It's what you're more comfortable to self-insure, because that's what it is. A deductible is really, in a sense, is what you're willing to self-insure.
Right.
So if I say this is that if you have that amount of capital or that amount of money in the bank at the time, then go ahead, take a higher deductible. Find out what you're more palatable, what you feel more comfortable to self-insure in that aspect.
Right. Are you comfortable with losing the amount of money? Like you're
saying, in case, in a situation, if I throw out here, you have a $500,000 home, and right now you have a 2% hurricane deductible, well, that's $10,000. So that's covered from anything from a named windstorm. So again, anything that comes out of a named windstorm, that's what you're going to be self-insured is $10,000.
Right.
So if you go up to a 5% hurricane deductible, you're now going from $10,000 to $25,000.
Right.
So when I sit down, I like to bring the numbers down as small as possible. So if I'm going to go here and say, $500 go from a 2% to a 5%, is it worth it? Because now you're taking on $15,000 more dollars that you're self-insuring just to save $500. So again, that's why I always say, and I turn it back and I said, if we're having this discussion, have you sat down with your lender and say, maybe there's equity in your home that you could take and pull out? Maybe I don't know what you're currently paying for interest. These are discussions how I can turn it back to come back to.
I would love to talk to those people, by the way.
Yeah, but that's the type of engagement that I have on a regular basis with our clients.
Very cool.
And that's what I teach my agents in my office. The same thing to do is to have these conversations.
Would you say that in general people are underinsured?
Yes.
In general, what's the percentage? Like you have to pick a number.
I would say it's over 50.
Wow, over half the homeowners are underinsured.
Again, we're having these conversations where people, the first thing is that you're not contacting me when you do make these home improvements.
Right.
Or you decide to make these life changes. They don't call us first.
Because I'll be honest with you, I'm building out my lanai. I wasn't even thinking about insurance. I was thinking about getting my permits, getting everything, getting everything in the row.
Right.
And I'm sure a lot of my neighbors who recently built their lanai with the jacuzzi and pool, they're not thinking about that either.
No, they don't, because you're in that mode of, I'm so excited about I'm adding value to my house.
Exactly.
But again, when you start adding value to your home, you're reaching out to the property appraiser. You're reaching out to
it's a project.
Again, you're decreasing the value there, so therefore you're going to be paying more taxes. Again, we're always put on the back burner like, oh, should I contact my insurance agent? No. The one time that you ever want to reach out to us, or we typically see this, is my insurance just jumped up by $1,500.
Exactly.
How can I come back to save this amount of money?
Get a better rate.
But what I always tell whenever I get an introduction to a future client or when I sit down with a client is, if someone comes back to you and says the first option is to cut your coverages to save you money, you need to fire that agent.
Absolutely.
Or you need to start looking for someone else because they're not representing your best
especially
interest.
in our area. I mean, we're hit by hurricane at least once a year, not twice. Like name hurricane, right? Like
Well,
major.
last year was an anomaly, and we don't know if that's going to be continuous going forward.
We have no idea.
Again, last year we had 3 main hurricanes that hit us within a less than a 3-month span.
Yep.
Because it happened in August, it happened in September and October. So we had 3 named storms that directly affected our area.
Yeah,
And
absolutely.
we haven't been in that scenario in a long time.
Yeah.
So now
someone
people are
claimed
up
that
in-
because we messed with the Indian burial grounds, now we're not protected anymore.
Well, either that or McDill Air Force Base has some type of technology that has a shield that protects our area because they want to make sure.
When
that
they're
the planes-
changing technology.
Look, I'm all about military. We're okay with that. So I'm not disparaging our military. so just FYI out there.
So I have a follow-up question to that.
Sure.
So let's say, because it's funny, I'm new to Florida, and last time before Helene hit, because everyone was talking about it,
Okay.
I swear, at least 7 days before, like the weekend before, we got hit on the weekend before, they were talking about it.
Yeah.
If I knew I'm going to get hit by a major hurricane in a week, can I up my coverage?
You can
When's the cutoff?
Well, that depends. So that's an open-ended question. So, and what happens is like when we start noticing a storm, and a storm was coming, and we're listening to the models or we're reviewing the models,
Right.
and they said, okay, look, they project that we're going to be hit by the storm or estimate whatever
Right.
that we're going to be hit within the next 7 days.
Yep.
What they'll do is, the insurance companies, what they do is they start pulling our binding authority. So that by pulling our binding authority means that they suspend
cannot
us
bind
from buying
insurance.
insurance.
Got it.
Right. So typically there's this area. So in the past it used to be, well, first thing I would say is how we would start noticing when insurance companies start suspending us writing business was when the state-ran company Citizens is usually the first. So once that domino falls, then we start seeing the other companies do that as well.
Ah, interesting.
So it just depends on the severity of the storm, how far away it is, and how within the area how much time we have. Now, I also tell people too is like, here's some other things that you can look at too. Is like if you wanted to get flood insurance, standard NFIP, which is National Flood Insurance Program. There's usually a 30-day wait if it's not required by your lender. But there's private markets out there where the time span can be between 7 and 10 days before we can authorize a policy. So again, when we start getting into this, which hurricane season starts at the end of this month, we're 6 months on, so until the end of November. I always tell people, like, it's not required for you to carry flood insurance, but you should get it, and you should at least have that conversation with your agent.
Right. Yeah, I've heard that.
And
Just because-
we send out notices out to our clients, and we do what we call a drip campaign. We send out emails and just alerting them, say, hey, look, it is and which I feel is it's an obligation for us to notify you and say, hey, we need to provide this. This is something that we do provide.
Right.
Let you have that decision, or let you make that decision if you want to carry it or not.
What's the one insurance myth that you would like to debunk?
Insurance myth that I like.
Like a lot of people have the wrong concept or wrong idea about it, and you would like to.
Oh, here's when it comes up. I paid off my car loan, so I don't need to carry insurance. Or
Oh, for the car.
for my car, right?
Okay,
So
okay.
I get this all the time. So hey, Ryan, I went and I paid off my car.
That's
So do I
nuts.
really need to carry insurance? I'm like, well, yes. By Florida law, if you have a vehicle that is tagged or tagged or licensed in the state of Florida, you have to carry insurance.
Right.
The minimum coverage is what we call personal injury protection, which is PIP, and $10,000 for property damage. That is what is current. But again, I told someone, I said, okay, well, what's the value of your vehicle? Well, I just paid $25,000. Okay, so you're going to come to me and now you want to take your comprehensive and your collision off, that in case you're involved in an accident, that you're now going to self-insure all of that? No, of course not. You still want to keep that covered. So again, that is something that I always get asked, like, because I paid this off, do I still need to carry insurance on my vehicle? And we also see this with the home too.
Right, yeah.
But then
I've seen that with some of the investors.
The properties,
they own the house free and
but
clear.
then that's where I come
Right.
in. I had a client 2 weeks ago. She called me up and she said, "Hey Ryan, I paid my mortgage off. I want to drop my insurance." And I said to her, "Okay, so
That's
and
crazy.
we're talking 500,000." I
That is
said,
crazy.
"Do you have that?" So that's where I had the conversation. I said, "Do you have that amount of capital that's in your bank?"
That is
And she's like, "Well, no, I don't have 500,000." So I said to her, I said, "Well, here's what we can do. Is why don't you again raise your deductibles if you want to do that?" So I would say take higher deductibles.
Yep.
Instead of dropping the coverage altogether, take higher deductibles, make it a little bit more palatable for you to carry insurance,
Right.
and let you now have all the decisions. So again, now instead of you having certain things that you can and cannot do, the whole thing is open now, and you can make any type of decisions.
Right,
so if you
right.
come back to me and say, "Hey Ryan, I want to cut contents," or "Hey Ryan, I want to do this," or "Hey Ryan, I want to take my hurricane deductible. I don't want to have a hurricane deductible, but I still want to insure for like fire, theft, and so forth."
Right.
You can still that. Now you have all these options that are presented to you, and now we can have a discussion to even tailor fit that policy to you instead of dropping coverage altogether.
Absolutely. That's why you need to speak to an insurance agent who's more relationship based rather than transaction based.
Absolutely. I say that on a regular basis.
Yeah.
As always, we're always looking. I'm a relational person, not. And what our agency is, we're trying to be relational, not transactional.
Absolutely. Same thing here in mortgages. So,
Yeah.
a couple more questions, and
Sure.
we got to wrap this up.
Awesome.
If you can go back in time and give yourself a piece of advice, let's say you can go back to the beginning of a career, like 20 years ago, what would you say to your younger self?
Buy Amazon and Apple.
No, about insurance, about your career.
No. Insurance 20 years from now, keep doing what you're doing. Keep putting the client's best interest forward and keep sticking to that strategy. I had always people try to tell me, make it. We've always had in the past where people try to push you in a direction to be transactional. And for me,
Especially with some names
Right,
that we
right.
shouldn't mention on this podcast. I know
right,
what
right,
you're talking
we
about,
can't. But
Right.
I've had other agents and other carriers that I've worked with to try to push you in that direction because again,
It's just volume.
it's
more volume.
well, it is.
Yeah.
It's about how much numbers you can bring in there.
Right.
And that's why I got out of the corporate industry. I got out of that realm because I wanted to represent my clients, but I wanted to still have that relationship
You want
with
to
them.
have that interest in life for real.
Instead of them
Yeah.
coming to me and saying, "Hey Ryan, we're going to do is we're going to turn, you bring a client in, we're going to turn it over to your account manager, and you're never going to have that discussion with them."
Right.
That's not how it works with me. What we do in our agency, and we keep this in that focus, is we bring in a client, and I'm always being a producer, always having that relationship with client, but I bring in an account manager, so now you have two people who are always looking at a file who are going to hear and provide that strategy.
Right, you
for
want to give them the
So again,
message. Yeah.
that's what I would say on that. The other thing is, like I said, I think we all learn from our mistakes, and I think
Well,
I
what
think
would be one of them?
what a mistake. Not believing in myself and trusting my instincts, and not making a.
Because there's a lot of noise out there. People telling you to do
Yes,
certain things.
well,
Yeah.
You get advice where people are more in line for their own best interests, and I think if I could have gone back and changed something, I think I would have made a career change where I'd stay in an industry, but I would have moved more faster into going into corporate than staying in a smaller agency at that time.
Oh, okay.
So again, that's what I would have done, because when I went to corporate, that's where I got to learn more about insurance, where it was more about presenting value to our
Right,
clients
right.
versus here's a policy, I'm selling this to you, and that was it.
I see. Interesting. Well, thank you for sharing that.
Yeah.
So, in a lot of industries, like mine included,
Yeah.
we all have these like war stories that we like to share with people. It's like a crazy story.
Yeah.
What's the craziest deal that you have done in terms of insurance? Like
The
maybe
craziest
the
story?
property is not insurable, like something nuts. Like anything can share.
Without giving a name.
Without giving a name, yeah. Protect the innocence.
Without
We
giving a
protect
name,
the innocence,
I had a client one time call me. He got back from vacation, and he saw all these cops were on his property. The sheriff's department and everything were on his property. Now, this gentleman had a very huge home, and he had close to about like 50 acres.
Mm-hmm.
Now, he had it all segmented because he also had a horse farm and so forth. And to find out that a child had gone missing.
Oh, wow.
And so he had posted on his, like every 100 feet, they was posted no trespassing or whatever. So anyways, he came back home and found out that, the authorities were on his property and everything, and he was concerned. He's like, what's going on here? Well, a child had got missing. What happened was the next door neighbor's niece had jumped the fence, had gone into his barn where he had horses, and decided to bareback ride a horse. And what happened was, they didn't know this, was that she was gone for a couple of days. What happened was she lost her grip on the horse. The rope had gone around her neck, and unfortunately she had died. And when they found the horse, because the horse was out and not in a stable or anything, they found that she was being dragged behind the horse. And so there was a lot of investigations that went on there to find out. Again, unfortunately this is what occurred, but again, the first call that he had called me outside of talking with his attorney and everything was that we had an umbrella policy in there, and it's covered for liability, and we went here and contacted the carrier, and he followed all his protocols. And again, those are the things that I say is, those are the uncomfortable conversations.
Right.
But then when you come back and then you know that you have everything in cover, you have all the coverage in place, and you have everything that's protecting him. Again, there was no wrongdoing on his part. Again, someone trespassed on his property, had done this and everything. But then to have the conversation and say, hey, look, if anything that did occur on here, you're covered. So that's why I do what we do.
That's great. That is great.
And again, we do get these conversations more times than not, especially during hurricanes. They're like, I'm sitting here and having this conversation, especially with someone who just lost everything. Mm-hmm. You can't go to this person and say, hey, everything's going to be all right.
Right.
Because you can't.
You need to be realistic.
You have to be realistic. But again, that's what we're here for, is we also sit here and go through that scenario with you. We went, and I could not tell you, like, when the hurricanes hit here, I mean, most of my employees and us, we worked on the weekends. Just because we're not a 9-to-5 job. Again, if we have like total losses, we have to be there for our clients. So again, everyone understands that we have families, but still we're there for our clients, because again, it's not about us making this transactional, it's relational. So
awesome. Thank you, Ryan. That's all we have for today.
I appreciate it, Kevin. Thank you. This was awesome. I had a great time. Thank you.